The commercial real estate market is showing signs of significant stress. As an investor, as an everyday American, this is something you're going to need to pay closer attention to. The implications go beyond the next regional bank that might write down a substantial portion of its CRE holdings, or what the next regional bank that fails might be. The implications are far broader, consequences that could span across financial markets, maybe the entire economy. And not just in the United States. We've already seen a bank in Japan earlier this month write down substantial losses based on US CRE, and another one in Germany. It's a global potential issue that's a little bit too familiar compared to the last one. But that's the thing, we need to go into commercial real estate, and that's what we're going to do in Monday's webinar at Eurodollar University. We're going to talk about what it is that actually has gone on in commercial real estate over the last couple of years, why it matters, what the assumptions were, as well as to put some numbers behind this, not so that it's just left as some big mystery. Let's go into the data and details to see if we can't figure out the magnitude of the problem or the prospective magnitude of the problem. And then most important of all, let's talk about some ways in which you can look at the commercial real estate issue, where you can find some data, some statistics, some price information to see and monitor how things are developing in that system. Because while we can see it's a potentially big problem, it isn't quite there yet, which means on the good side, maybe it doesn't get there, or on the bad side, if it does start to spill over more broadly, what are the things that we can look for in order to see if that's actually happening so that we're informed in case that it does. And we got some data just today as sort of a preview for Monday's webinar. We got some data today for the census from the Census Bureau on multifamily construction. Because multifamily apartments and projects are a huge part of this CRE bubble. As we'll see, it is indeed a bubble. What the Census Bureau reported in permits and start construction numbers were, in one sense, somewhat alarming because multifamily permits had dropped to 405,000. That's a seasonally adjusted annual rate in the month of January 2024, which is actually the lowest since April of 2020. Now, as you can see here, multifamily permits had jumped up to almost 750,000 late in 2021 and the early months of 2022, which was the highest since the middle 1980s. Very clearly an imbalance, very clearly an unusual level of activity. So that was in the amount of permits that were filed. And then going to March of 2023, ever since last year's banking crisis, the level of permits and starts, as we'll see in a second, have been declining and relatively precipitously to the point that in January we had a new low despite rates going lower. So there is a potential that we're seeing a developing setback in commercial real estate construction. And again, we saw the same thing on the side of starts, where a huge increase in actual projects started in late 2021, early 2022, except in this more recently, you've got wild volatility in December of 2023, but yet January comes in at a really low 314,000. And just like in permits filed, the number of projects started has been down substantially since last year's banking crisis, suggesting maybe there is a financing element to what's happening in apartment construction. Now, just one more thing before we go here. Let's just put some big picture numbers on the CRE as a whole. So we're talking about more than just financing apartments and multifamily construction. We're also talking about commercial mortgages, the infamous office towers we keep hearing so much about. According to the Federal Reserve's figures, which we're going to go over in more detail on Monday, the Z1 statistics, or the financial accounts in the United States, we see that combined, both commercial mortgages as well as multifamily project mortgages and debt, there was about 4.6 trillion outstanding around 2020 when all of this really got started. And then by the end of 2022, at really the top of the bubble, there was 5.6 trillion in this commercial real estate debt, which goes along with what we just saw in apartment construction. There was a massive influx of debt financing. And this is just part of the picture. There was also other forms of financing too. But you have $1 trillion in additional debt on the books of the banking system as well as other places in the financial world, $1 trillion increase on a $4.6 trillion base in an incredibly short period of time. And what's more concerning than that, the assumptions that went into that massive deluge of debt are not panning out. And of course, when you have this much demand going in and all at once in a sector which is incredibly supply inelastic, as we've seen across the rest of the supply shock, that means huge increase in demand, inelastic supply. The only way to adjust and balance out that equation is prices. Prices surged because all this money came pouring in, and that just led to an enormous imbalance. $1 trillion in that short period of time. So there is scale behind this commercial real estate problem, but what that means ultimately isn't clear yet. So Monday's webinar at Eurodollar University is going to be for those who want to dive deeper into the details about commercial real estate. This is not for someone who's looking for the next big stock or next big investment opportunity. This is to understand the situation, the risks that are involved, and everything else. And we're going to go over critical information that I haven't put up on YouTube and I can't really get into in a YouTube video setting. We're going to go deeper into this topic, which is what we're known for at Eurodollar University. We're also going to have a live Q&A session following it. In fact, we're going to devote a significant amount of time to answering your questions about this topic, what's really there, what we really should be looking for. And just want to remind you too that I guess we're limited to 2,500 people and we're already near that limit to begin with. So if you are thinking about attending, please do sign up in the link in the description. And I do hope to see you there. Monday, President's Day, commercial real estate.